Now, look, if you only looked at the averages, this would have seemed like a sedate day. Dow dipping 23 points, S&P inching down 0.20%, Nasdaq declining 0.30%. Oh, but when you dig deeper, there was a major rotation out of the Charlie the Tuna stocks and into plain old albacore packed in water. It all started yesterday when the banks reported much better than expected quarter, especially given that the inverted yield curves crimping their ability to make money off your deposits. Turns out the banks have so many other robust earning streams that we don't need to fret about the yield curve as much as we once thought. J.P. Morgan delivered an unbelievably powerful number with impressive growth practically across the board, including an astounding 8% revenue growth. The stock immediately roared from 116 to 121. This is a bang stock, for everyone's sake, before closing at just under 120. As CEO Jamie Dimon pointed out, I quote, "The consumer continues to be quite strong," end quote. Hey, gloomers and doomers, listen to Jamie. Citigroup posted a similar excellent quarter, and this market lapped it up, although it gave back some of the gain today. Even Goldman Sachs, which actually missed its projections, was able to tell a good story, and its stock rallied yesterday and today. Goldman put its buyback on hold while they sort out this Malaysian bond scandal, but they're now resuming the repurchase program. Hey, isn't that conviction? Then today, Bank of America printed a huge number with fantastic growth. Their digital business is so good that I almost think of this as a technology company that happens to be in banking. Bank of America has 38 million active digital users, 29 million mobile banking users. Last year, they launched a virtual voice assistant, Erica, and it already has 9 million active users. These are extraordinary numbers, people. They're not just attracting millennials. They're luring in older users, too, or the numbers couldn't be that big. There aren't that many millennials, for heaven's sake. Bank of America tells us the consumer's in good shape. Their consumer banking division saw 7% loan growth, which is part of why I think the earnings have real staying power. Hey, by the way, and the loan losses are very low. How satisfying are these figures? Warren Buffett currently owns 10% of Bank of America, and he's asking the government for permission to buy even more. I'm betting the Oracle of Omaha wish list will be granted, and soon he'll be in there buying the stock hand over fist. The market embraced these quarterly reports because the banks showed consistent earnings growth when very few people expected them to. They're supposed to be more hostage to the Fed. With their consumer emphasis, the big banks can decouple from the trade wars. Now, I know the Commerce Department just released some ugly retail sales numbers this very morning, down 0.3% in September. But these banks tell a different story. They've become the ideal names for the Star-Kiss-style market. Yep, they're not flashy. They're just tasty.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.